Hello everyone, welcome to the Ichimoku.co chart of the day. To the Nasdaq 100, and here we see the trend continuing to the downside following that very strong selling on Friday. The Nasdaq 100 on that day actually made a new major high at 5897, and then we saw the selling for the remainder of the day. Very large black body candle, and today a continuation of the trend to the downside extending through the low of the previous day's trading. We do have a switch from a black body candle to a white body candle, so it does suggest that the sellers certainly aren't as strong as they were previously. That net momentum today has favoured the buyers, where we've seen a positive close in terms of the open, the close being above the open and suggesting some net momentum. But we do need to just consider that the previous day's trading certainly was an extreme candle, and we don't tend to see strong follow-through after an extreme candle, so just being on the lookout for a potential continuation of this trend to the downside for the next day's trading. Now, having said that, however, we have seen the buyers take control at the close of trading here, and this does suggest that there is some potential for a change of trend in the market to attempt to retrace this very significant push to the downside by the sellers. If we do see a trend change occur, and that would mean a higher high and a higher low for the next candle, we may face some very strong resistance around the Kijun-sen indicator initially, and that's it there, that pink line at 5733, and then at the Tenkan-sen. So just monitoring very carefully how the market reacts to those levels if we do see the trend move to the upside. Now, if you recall previously, we were looking at the market trading up around these levels on the Nasdaq 100 and suggesting that this market certainly was quite strongly overbought. Didn't like the way that we were making these new highs on these very small body candles. It did suggest that there certainly was a lack of interest from both parties here, and we were looking very overextended in the depth of the close away from the Ichimoku cloud, and we now have seen this sell-off with the market attempting to find some equilibrium in terms of the distance away from the cloud. So the cloud here represents equilibrium in that longer term time frame, and this suggests that this sell-off is probably quite healthy for this market. It suggests that in the longer term time frame the market may bounce from here or test down to a lower level, perhaps down around this previous swing low, very close to the cloud, and then perhaps bounce to the upside. So in a longer term perspective, this market still is fairly healthy. Obviously in the shorter term time frame, with the trend being down and the market closing through the Tenkan-sen, we do have a negative market in the short term time frame and in the medium term time frame with this close down below the Kijun-sen. Although this close at the moment below the Kijun-sen has not been strong in terms of the strength here of the sellers, with the buyers closing with control in this current candle. Now, remembering here the Chiker span remains above the corresponding price action, so it does suggest that we still have some positive momentum in that medium-term time frame, and it does suggest that we could see the buyers come back into this market and attempt to trade to the upside. But just bearing in mind this Kijun-sen and Tenkan-sen resistance. The Tenkan-sen trades at 5765 at the moment, the Kijun-sen at 5733. And just looking at our areas of support and resistance, and importantly for today's candle, we've seen the market interacting with this previous swing low at the 5637 level and holding up around that region, with the sellers losing commitment around that area. So that is going to be an important area over the next few days. If we do see any selling 5637, if the market does close down below there, we certainly could see a test down to this 5606 level or even beyond. 5606 itself becomes very important if the trend does continue to the downside. Further down we have the cloud coming into play, and it does move higher over the next week or so, but also a window down around the 5512 area. For today's trading, we have seen the market close now down below that previous window that was opened, and it had held as support for that previous day's trading. We did test down through there, and I like to see markets closing through windows to finally negate the strength of them. And with the market closing today down below there, it certainly does suggest that it's no longer in play as a significant area of support or resistance. Obviously, with the Kijun-sen trading around that region for the previous day's trading, it was an area that we were expecting to find some solid support. We did see some loss of commitment by the sellers down around that area, but today, with the market closing down below there, it does suggest that the sellers still perhaps are showing some strength in this market. Now, just using our Fibonacci retracement tool here, and we're examining the relationship of this current first time frame downtrend that the market is now in to that immediate previous first time frame uptrend, and that uptrend was only pretty much one candle or so, and by the same token, one candle to the downside, or two if we include this Friday's sell-off, which was an outside day, technically hadn't changed the trend. But the important thing here is that the market has interacted with the 423.6% level. And that is something of an extreme level. And very often when we see an interaction here and the sellers losing commitment, and a day such as today where the buyers have taken control, it does suggest that we certainly could see a change of trend to the upside for the next day's trading. So just monitoring very carefully how the market behaves over the next day. I suggest that if we do see some stronger selling down through here, we could end up trading in a first term time frame downtrend down to the 685.4% level. But that level is very rarely an area that's touched. The 1109% level certainly shouldn't come into play down around this region all in one first time frame downtrend. But this loss of commitment by the sellers over the last 2 days around the 423.6% level does suggest that there is some potential for a technical change of trend. But the thing that we do need to consider is that even if we do have that change of trend, we do face some very strong resistance overhead, so that change of trend to the upside, if it does occur, may be short-lived. Now moving to our bands here with the Nasdaq 100, and importantly the market is finding support around the bottom of the bands. Previously we were trading outside of that upper band in a fairly strong bullish manner at times, and then that weaker, very small body trading, it did suggest that we still had a strong bullish tone. But once we then traded within the bands and mean reverted and then testing down to the lower band, it certainly did suggest that that strong bullish tone was over, and this could be the start of a potential transition into a downtrending phase. Now, they don't normally happen all of a sudden. It could, but what is a likely scenario here, now that we've been testing down around that lower band, is that on a rally we could see some resistance coming in around the middle of the bands, market testing back down to the bottom here and finding some support, and then an eventual breakout. Some swing lows have to come into play as important support, probably this minor one down around here around the 5,600 level, possibly just down below there. That other one, it's a major one, 5,568. But to confirm a stronger bearish trend in the medium-term time frame, we would have to see, a strong bearish breakout to the downside with some strong follow-through and some of those swing lows being taken out. Now, just moving over to the weekly chart with the Nasdaq 100, and just putting all of this in perspective, it still is a bull market in all three timeframes in terms of the weekly chart with the Nasdaq 100. We are trading above the cloud, above the Kijun-sen, the Tenkan-sen, and the Chikou span is still strongly supporting this bullish momentum. Problem here being, however, that if we look at the distance of the close here from that previous week's trading, the largest black body candle that we've seen for some time, so quite some negativity coming into this market in that short-term time frame in terms of the short-term dynamics in that week. We are looking very overextended still in depth away from the Ichimoku cloud. Very great distance. So this is a natural thing for the market to do, to attempt to find some equilibrium. Now, importantly for this week's trading, we are seeing the Tenkan-sen at 5632 holding as support. So that is a very important area for this market, and we haven't closed down below that Tenkan-sen since roughly about November last year. So that is a very important region. Now, the last few times that we had closed down below there, we hadn't seen any follow through for the previous week, for the next week. So very important trading. Even if we do see a negative close down below there, won't be convinced that we are going to see any significant downtrending activity unless we have another strong bearish close down below there confirming If we do, we could see a test down to the Kijun-sen, trading at 5375, and that is an area where we are likely to find very strong support. Now, bearing in mind, after this week, the Ichimoku cloud moves significantly higher into the next month. So any urgency for the market to retrace, if we don't see it happen for the next week or two, it's going to be lost, because this will ease the pressure. The pressure here is being built by the depth of price activity away from the cloud, and as we move here, the cloud will move higher and it will ease some of that pressure. So moving forward, our important benchmark here is the Tenkan-sen, trading at 5632, and then if we do trade down through there, our next important area is 5375. But importantly, the market still will be healthy if we see something of a sell-off, because the market had extended well through some of these levels and looking very overextended previously in the depth of price activity above the Ichimoku cloud. Let's go through to our monthly charts here, and still a strong bull market in all three timeframes. And as we know on our monthly charts, the Kijun-sen is the important indicator for a major primary bull or bear market, and here we are still well above that Kijun-sen, which trades at 4842. So for a primary bear, we require a strong bearish close down below that Kijun-sen with strong follow through. So still this market will be intact even until we trade down to this 4842 level, this primary bull. Importantly, the Tenkan-sen could come into play at 5272. It would signify a significant bearish activity in the short-term time frame if we do close down below there, with the sellers in control and showing some commitment. But at the moment, we are still well above that Tenkan-sen indicator.